back to Block TV, and today we are happy to be joined by Yoni Assia, founder and CEO of eToro. Yoni, thanks for joining us. All right, now a year that has seen the highest of highs and the lowest of lows. You know, Bitcoin is up year over year, S&P is down year over year. Somehow the traditional markets have been more volatile than crypto recently. When will the mainstream and institutions finally take Bitcoin seriously?
I think, again, the case for Bitcoin is not necessarily to try and attract the institutional money in. I think the case for Bitcoin is more for consumers to use it when in need. I think we haven't seen the real use case of it as payments and a store of value sort of rise significantly because of the situation, yet only in theory. There is no doubt that it is a limited supply cryptocurrency or deflationary asset compared to fiat, which is now printed in unprecedented amounts. So this is the logic that all of the Bitcoiners have, basically the cap of 21 million, the upcoming halving, the decentralization nature of it. But I'm not 100% certain that that attracts, at least so far, traditional institutional money. So when traditional institutional money look at various assets, they consider risk reward. And when they think about safe havens like the US dollar, money market funds, or even gold, that is because they have a very, very sort of extended history as safe havens. So I still think Bitcoin is much more aimed towards consumers versus institutional money. And if you think about it, and that's one of the reasons I'm a big Bitcoin believer, other than obviously the entire macro, is you can only have 1 million people who have 21 Bitcoins, right? So, and if you think about it, there are significantly more people who can own 21 Bitcoins than a million. So I think it's also a healthier ecosystem if we get hundreds of thousands of people who own 1 to 20 Bitcoins versus one institution suddenly buying 1,000 Bitcoins.
Mm-hmm. But if Bitcoin could be split up endlessly into Satoshis, I mean, isn't it essentially the same sort of? I mean, it's a limited money supply, but can't institutions or individuals by ratio, by relative, can't they buy up a large portion of Bitcoin and thus make it just as imbalanced as other asset classes?
No, so mathematically, the answer is no. So while Bitcoin is fungible and divisible, it still has a limited supply and an agreed upon sort of process to create new Bitcoins. But unlike fiat can actually, you can add more fiat. So it's not about, you can divide the dollar into cents, right? So a dollar can have 100 cents and Bitcoin has many, many, many more Satoshis. But the amount of dollars is what's being expanded right now. So there is a printing of an additional $2 trillion now with a new offer to print even an additional $2 trillion through another act. Nobody in the Bitcoin ecosystem, by definition, can print more Bitcoins. That is what is defined by code. So the fact that it's divisible and fungible doesn't mean it's inflationary like fiat currency.
Mm-hmm. Now, that's not the only thing that separates crypto and especially Bitcoin to traditional markets, but there's another unique aspect, whereas crypto markets, and you know this well as running eToro, they don't close. They're 24/7, they're always going. While traditional markets, they have working hours. If there's too much downward pressure, they could choose to close. There's sort of circuit breakers. Is that something that scares away investors from crypto, or is that something that you could view as actually a positive of crypto and affects it well?
That's definitely a positive thing about crypto. I think that is the biggest feature of a native digital asset. And our big belief in tokenization of assets came from the point of view that the public ledger, the blockchain, enables Bitcoin to be always transferable globally 24/7. So it's not only that the exchanges run 24/7, it's the core feature of Bitcoin, which makes it semi-real-time settled and cleared on the blockchain 24/7. And I truly believe that this is actually the beginning of more markets who will transform into 24/7. We're at eToro exploring how can we extend the hours of, for example, fiat to fiat, so euro to dollar, yen to pound, to 24/7 as well. Traditionally, fiat to fiat is 24/5. Futures are 24/5. Commodities are 24/5. But I think now that there are more financial institutions from the crypto space like eToro that also have sort of a footprint in the traditional space, I think gradually we will see trading hours extended also in the traditional space. And I think generally real-time settlement and clearing, so the ability to transfer funds at any time, which should be cleared in real time, in any time, 24/7, I think that is by definition an inevitable future for finance.
Now, this idea that traditional markets actually taking the good from the crypto sphere, like 24/7 trading, like real-time settlements, is great. And right now, really interesting that traditional markets are very volatile, while crypto is slightly less volatile, but crypto is used to this volatility. What other lessons can traditional markets, traditional traders learn from crypto traders right now? To hodl, to buy the dip, don't worry, the sun will come out tomorrow. We're used to this volatility. What could traditional traders learn from the crypto sphere?
So first of all, I think it's a great opportunity for people who cover crypto, who write about crypto, to go into the markets, into the traditional markets. It's something that we've seen in eToro now. We've seen a lot of our crypto hodlers suddenly dive into the market, suddenly buy oil, or suddenly invest in stocks and indices, because they're very familiar with that level of volatility. The second thing is a lot of the crypto community are sort of amateur professional economists. Everybody has a theory about, the printing of money, a theory about globalization, the nature of currency, the nature of fiat money. And I think what we're seeing now with this global pandemic, it does raise a lot of the issues, a lot of the questions that the crypto community was dealing with over the last 10 years. So who's printing the money? How much money is supposed to be printed? It differs between country to country. What does that do to inflation, to deflation? We're definitely in a point in time where what existed a month ago is going to be very, very different 12 months from today. And a lot of the Bitcoiners and the Bitcoin and crypto ecosystem are very sort of futuristic around what is going to happen next year or 3 years or 10 years from today. So I think it's a great opportunity for crypto enthusiasts and investors and traders to dive into the real markets. I think what the real markets can take is sort of embracing volatility. So I'm a believer that we're going to see a decade of volatility. That the volatility isn't going away very soon. That just like crypto is very volatile, but right now S&P, Nasdaq, and sort of all of the stock markets indices are actually more volatile than Bitcoin. I would generally say we're expecting a lot of volatility in the next decade, just because of the interconnectivity between all of the markets and the fact that everything is fragile, as Nassim Taleb talks about the fragility of the markets and the economy. Everything is leveraged and everything is interconnected. So suddenly, a butterfly in China can shake the markets in the US. So I think embracing that volatility and understanding how to manage money under that volatility is something that traditional investors will have to learn. On the bright side, it's something that has existed forever. So in Benjamin Graham, the Intelligent Investor book that Warren Buffett talks about quite a bit, he talks about how an intelligent investor needs to avoid Mr. Market. So he needs to buy and invest in stocks, like investing in businesses, and not necessarily consider the volatility and irrationality of markets.
Mm-hmm. Now, you mentioned this idea of the butterfly effect. All the markets are connected. A small butterfly in China could have rippling effects around the world. But right now, the U.S. government isn't quite a butterfly, but more of a giant elephant stomping down with the printing and giving of a $2.2 trillion stimulus plan. Now, I know traditional, the crypto community you mentioned has for years been rallying against this unlimited printing of money. In your view, what will this massive injection into the U.S. economy, which, like you said, is connected to the world economy, what effect will this have? Will it work? Will it not work? And will it be destructive for years to come?
So there is the question of whether this will devalue the dollar. Right now, the dollar has increased in value in this pandemic because it's not only the dollar that's being printed, it's all currencies worldwide right now. The machine going burr is very aggressive everywhere. I think that in the long term, we might enter hyperinflation. Again, we've seen eras of hyperinflation, especially in Israel in the 80s. We've seen it recently in Venezuela. So there's a chance for that. But again, I doubt we're going to see it in the US because the dollar is the world reserve currency for now. And you can read on Twitter that people are saying that when the US is printing $2.2 trillion because it's the reserve currency of the world, it's actually a transfer of wealth from the entire world into the US. So they're using their power as the world currency reserve so they can actually manage a decent inflation and print a lot of money. So the big question here is this scenario going to evolve to the dollar losing its dominance as a reserve currency? That is the big risk here. But again, who are the contenders? Can Bitcoin be a reserve currency for the world? Probably not. The euro is right now at even a more delicate or fragile place than the US. The yen has negative interest for a while. Yuan is not entirely a free market currency. So there's yet to be a real alternative to the dollar as the world currency reserve. And as long as that's the case, I think the US might be able to actually sort of prevent a depression or minimize the recession impact by the stimulus act that they've passed.
Mm-hmm. Now, let's switch gears for a moment and kind of want to pick your brain because you do have a unique insight as the head of a trading platform. eToro has both crypto and traditional assets. I'm sure you guys have focus groups, you get feedback. What do you hear is the biggest complaint from people who want to trade crypto or are trading crypto about the crypto? Is it UI, UX that is notoriously bad in the field? Is it the trading instruments that are lacking? Is it the lack of regulated exchanges, regulated assets? What are the biggest complaints that you're hearing from either prospective crypto traders or people who are currently trading crypto?
So, first of all, a lot of the complaints that you've mentioned, we wouldn't necessarily hear about them because we are a regulated platform. We have a great user experience, a very simple and intuitive way to trade crypto. And what we found out, and that's again a core part of the eToro platform, a lot of people didn't necessarily know how to trade and what to buy. So, which is why the concept of social trading really helped a lot of our users because they were able to talk to one another, to ask questions from a lot of people. So with 13 million registered users worldwide, you can find users from 140 different countries on eToro trading Bitcoin and talk to them. So that enables people to learn more, to understand more about the crypto. So it's a lot about education. From our surveys, it's a lot about market education and educating themselves about the different cryptocurrencies. And the second part is some people just don't necessarily know how to trade or what's the right allocation between cryptocurrencies, which is why they can, in eToro, copy top traders from all over the world or invest in copy portfolios. So with a click of a button on eToro, you can actually invest in a portfolio of the top 15 cryptocurrencies on a market cap weighted allocation. We'll manage that for you. So we did have a lot of people who came to eToro to, for example, buy XRP or buy ETH, and then see a lot of other cryptocurrencies, whether it's Tezos or BNB or Bitcoin, and ask us, how do we allocate between all the different cryptocurrencies? We usually tell them either copy different crypto traders on the platform or simply invest in the crypto portfolio.
Mm-hmm. Now it's not just social trading, but eToro also just launched 185 new stocks for offer, including Zoom. That's what we're using right now, the popular conferencing app. We were just speaking about before the show how we're really impressed by Zoom. They've somehow the servers have been keeping up with the massive demand. But Zoom right now, right time, right place. It's the perfect solution for the unique problem that's been caused by the quarantine coronavirus. What's another solution right now to this unique problem that people haven't heard about?
No, I think generally a lot of people heard about the different solutions and probably even used it. There's Skype, there's Hangouts, there are a lot of different solutions for video conferencing, but I think sometimes it's hard to pinpoint exactly what is that feature that makes something sort of become the place where everybody goes. But definitely during this crisis, Zoom has emerged as the standard way to communicate. And by the way, its scale is very impressive. So I remember in the past when you tried to do Skype with 4 people, something always broke. Sorry, Microsoft, maybe it's not the case anymore, but that was definitely the case in the past. And yesterday, I did a Zoom with 600 eToro employees on the Zoom. I saw videos of hundreds of eToro employees. And I have to say, the scale of the platform and its ability to scale towards one-to-many and many-to-many conversations, with this being sort of completely at mass scale right now. So my parents are using it, my children are using it for school, my parents are using it to talk to my children. So, and we're seeing this is globally happening across Europe, across the US, across Asia. So I can't even imagine the scale of they probably scaled 50 or 100 times from a server point of view, from a load point of view, and they managed to do it seamlessly, which is very, very impressive. Mm-hmm. So I think our technology just works. It's impressive. The stock, by the way, is still very expensive, but a stock price is always an indicator for what the company will do in the future.
Mm-hmm. Now, I think that hopefully Bitcoin could take some scaling lessons from Zoom in this time. But not just video calling, but this idea of unique solutions, right time, right place. Netflix is another great example of a solution right now that's providing entertainment to people. But I'm saying as a business investment idea, what is something right now that possibly wasn't the best investment before coronavirus, but because of coronavirus, there's this unique opportunity, right time, right place for people to get into.
I think, again, there's some obvious ones. I think cloud computing is a very obvious one. So all of the cloud companies and remote working from home companies are going to benefit from this. I think consumption of virtual desktops, whether it's from Microsoft or VMware, is something that will significantly benefit from this, because the entire world now has transitioned to working from home, which is, by the way, mind-blowing. I think eventually internet companies in general are going to significantly benefit from this, because everybody moved to the internet. So I think the internet first companies are going by definition to take a big bite of companies that are more brick and mortar. And that's sort of across the board of all industries. So, for example, I think I suddenly see my parents ordering groceries online for the first time. So things like, again, they're very much hurt in the short term. So, which is also potentially why there's an opportunity. But things like Grubhub, Uber Eats, which is a part of Uber, which obviously got hurt significantly because nobody's going from one place to another right now. But I think deliveries are going to significantly increase in scale, deliveries through the internet over the next couple of years post-corona.
Mm-hmm. Now,
there's a big question whether people are going to be afraid. Again, we don't know how we're coming out of this, right? If I would tell you 3 months ago that your government, US government, European government, any government would tell you, stay in your house, you're not allowed to leave your house, there's something contagious, don't leave the house, and if you leave your house, there's police telling you to go back to your house, you would absolutely call me insane. You would not believe that in the West world, people would be willing to be locked in their house with police or military strolling the streets, preventing them to go outside, right?
Mm-hmm. Right.
But that's what happened, right? We suddenly, 30 days, we lost a lot of our sort of rights. We're not allowed to leave our house. In Israel, there's surveillance on your phones, in a lot of other countries too. This is simply an unrealistic scenario if you would thought about it 2 months ago. So you have to ask yourself, what's going to happen 2 months from today? How are we going to be more afraid to leave the house? Or are we going to realize that government has too much power? Are we too complicit with the situation? Although, again, from a health point of view, it does make sense. The lockdown does make sense to try and flatten the curve. But there are a lot of questions, societal questions here, that it's unclear how is society, Western, Eastern society, going to look after this? Is it going to change? I hear about a lot of people who are saying that they would want to work significantly more from home after this crisis. I hear a lot of people saying that they might want to reduce, would want maybe to work less after this crisis. Maybe people would want to consume less after this crisis, or everything could just go back to normal.
Mm-hmm. Now, speaking about what's normal, I'm not sure if this is an April Fool's joke, but there are reports out there that Binance is set to buy CoinMarketCap, and we were just speaking about the increased power of centralization during this process with governments taking more control. If this is true and Binance is set to buy CoinMarketCap, which has one of the highest visit rates in terms of in the crypto sphere, what is your take on that? Does this take away credibility from CoinMarketCap's data that they have? Was this the beginning of the end for kind of the decentralized crypto sphere, where if they start buying, they've been buying up companies for a while now, Binance, Coinbase could follow suit, and then it'll end up looking like traditional tech industry, where it's just the big companies kind of having an outsized control over the industry?
I think, again, in general, it is there are economies of scale in technology. And if you look at the traditional market space, all of the exchange companies have become both technology companies and data companies. So if you look at Nasdaq or LSE, they have three basically main businesses. One is exchange fees. That's their traditional space. The second is providing their platform as a white label for other countries. So I think Nasdaq is powering a lot of the European exchanges. And the third is data. So the tick-by-tick data, the data streaming, for example, on trading platforms, and that's their third part of the business. So I think in general, we can expect exchanges, which makes sense in the crypto space, to follow the steps of exchanges in the traditional space.
Mm-hmm. It's very interesting. If it's true, it would be quite a big acquisition. But lastly, before I want to let you go, it has to be said about, because in any other circumstance, right now, all we would be talking about is the upcoming Bitcoin hard fork. But seemingly, it gets lost under the coronavirus hoopah. But do you think, because I do want to speak about it, do you think that this current economic situation, where there's a lot of uncertainty right now in the traditional markets, a lot of people are losing their jobs, governments are going to start bailing out smaller businesses. It's a really interesting time right now. Do you think that the real world reality that people are facing, do you think this will change miners' reaction to the hard fork? Whereas before, if you were told the miners, they're about to get the rewards cut in half, they might have had some decision a month ago. Do you think that this new world reality would change miners' decisions and reactions to the hard fork at all?
First, it's a halving. I don't think. I think what we're seeing right now with the price of Bitcoin going lower, and the halving in May, I think that a lot of miners are probably finding themselves in a difficult situation. So for a miner, what happens is you're going to lose 50% of your revenues, right? And at the same time, to my understanding, the large manufacturers, Bitmain and Bitfury, I think, are launching new miners that have better processing power. So these things together basically mean that miners that can't completely overhaul their systems or take a hit are out of business. So that's something to consider, that this is a very stressing environment for miners. We might see some consolidation in mining, whether it's in pools or in the miners themselves. And there's a question of electricity prices, of whether we'll see. So far, I don't think we've seen a reduction in electricity prices. I don't think we're going to see this leading to electricity prices. But again, I think the environment is such that there is a chance we're going to see a lot of miners being squeezed out of the market.
Mm-hmm. Yeah, it's very interesting. Of course, I meant Bitcoin halving. I'm losing it here in isolation. It's been too long. But Yoni Assia, thank you so much for this insight, for joining us today, as always. And till next time, and for all our viewers at home, If you want more on your blockchain, cryptocurrency, and tech news, make sure to check us out at blocktv.com.
Watch us on Amazon Fire TV and Roku.